All right, so welcome to another video. Today, what we're going to do is I'm going to share with you kind of 3 ways to find the trend or a direction of a stock within 5 seconds. Now, for me to explain this to you, it will take me longer than 5 seconds because we're going to go over kind of the details of each kind of way to spot these things. So it'll take me a couple of minutes to explain each one. But once you see the process and the technique behind it, you'll be able to kind of spot a direction or trend within about 5 seconds. It's not 100% accurate. It's not going to give you the full fluctuations, but it'll give you a rough idea of kind of like where is the stock going, what kind of direction to expect over the time period that you're kind of looking at and choosing. All right, so let's take a look at kind of number one we are going to start out with. And the first one that we're going to be taking a look at is looking at a simple, just looking at the simple bars, and I'm going to go ahead and turn it to, there we go, just a bar view for you guys. All we're going to do is just look at the time frame, and we're going to switch it from the daily time frame. And if we take like CRM, for example, we're going to switch it to a longer time frame. And the reason that this kind of works is that if we go from a daily to a monthly, what we can easily see is for that month, how is that stock behaving? Now, this works really well when it comes to the end of the month. So let's say you are kind of in the 21st or 22nd day of the month. The month is kind of almost over. If you are not there, you are, let's say, the first or second of the month, just look at the previous candle bar and get an idea, because there's just the energy behind it. So what we can see here is just overall recently with CRM, we've got basically negative, 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 negative. This one kind of tried to hold flat, I would say, and then again negative. So you can see the trend has been negative. And for me to just see the month, what's going on this month, I could tell you that, hey, we're just trending lower. There's weakness there. It doesn't mean that things can't roll back up, or it could be a good time to buy the dip, right? Because oftentimes you may want to be buying on dips or buying on value, or when other people are panicking, you could be doing that kind of thing. But overall, for the current trend, if let's say you're putting on a trade for the next 10 days or 15 days, a calendar spread, vertical spread, that kind of thing, this one right here, it's definitely showing you that there's a lot of negativity. If you look at, let's say other things here, we've got XLP, where we've got a handful of bars here that are green, and I switch it to more of the monthly, you could see, hey, for that month, we are green, we're going up. So if I'm doing a shorter term directional trade, let's say I'm doing a day trade or something short duration, like that I'm just going to be in the trade for a couple of days, I may want to stick to the direction of the stock in here. And you can take a look at this with any stock, like let's say JP Morgan here, we had earnings that came out today. Also monthly, we've been going down, 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 down. And you can see today also it's down. So if this stock right here, let's say, was heading up on this up day, I probably wouldn't want to get bullish because overall the direction is bearish. So very quickly, I can just analyze it in the same way that over here, if the stock is heading higher, 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 here's February time frame on these up days, I don't want to go bullish on a stock where I have an overall energy going to the downside. So here was kind of February time frame right here. So here's 2022. We've got January, February right there. So we've got problems. I wouldn't want to go bullish when everything's kind of negative. So that's one thing to kind of pay attention to, is just simply switch your time frame going from a daily to a monthly. If you're doing more day trading or you're doing some more active trading, like let's say you're doing, you're trading off the 15-minute or the 10-minute, what you could do is just switch to the daily and just see what the energy is like for the day. It's a little bit more difficult, but you can basically just go to a longer time frame to spot, hey, the energy in the direction of the move. Let's go ahead now and take a look at item number 2, or method number 2. And for this, what we're going to do is we're going to go in and take a look at moving averages. Okay, so moving averages are a great way to spot kind of a direction. And you don't even need a ton of moving averages. You just have to kind of look at kind of the angle of the moving averages to start with. Yes, you could do kind of a crossover. That's another way of doing things. I'm going to show it pretty simple for you right now. So what I will do is go in and I'm looking at the 89 moving average right here. So I've put on a moving average on this trading platform. And this trading platform, by the way, is TC2000. Okay, so I'm going to switch it to yellow and I will hide this one. So what I could do with this moving average is I can actually just look at the direction of this moving average. I'm not even looking at where things cross over yet. I'm just looking at kind of the direction, and the direction here right now, you can see at this point it's heading higher. Then we're going a little bit flat, and then we're starting to roll down. So if we're going down on the moving average, the trend is kind of downward. So, you know, a lot of people use crossovers, and I'll talk about that here in a second. But you could see here the moving average is flat, so the stock is kind of moving flat. And then here we're starting to get a little bit of an angle. So at this time frame is a good time to maybe enter the stock on the upside or long. And you can see here kind of what happens is you get kind of the return and push to the upside. So you're just looking to smooth out the prices. You're not even really looking at every single tick or candle. Otherwise, there's just a lot of noise there. And once we get kind of here to roll over flat, this might be a time to kind of pause because we just had this big move. So again, you're pausing, and then you'll see here, well, we're going to roll over the other way. So you're noticing here we're flattening out a little bit, and we're starting to roll over. So this right here is starting to push downward, and we're starting to pick up some more speed to the downside. So just by looking at the moving average and just kind of the direction it's moving in, and you can take your pick. The one that I'm using is the 89 right now. You could switch it to a different moving average time frame, like let's say a 21, but your signals will be less reliable. You'll get a lot of whipsaw. So smooth it out much more so. You could do the 50, you could do the 60, 100 day, 50, 100, 200, you know, these are exponential, and it just depends on the duration that you're looking to trade. I'm using the Fibonacci levels and I'm using exponential, so that's why I kind of use about the 89 for some of the longer dated stuff. But as you start stacking some of this stuff, you can actually also do something where you go ahead and coordinate two moving averages together using a 21 day and combining it with the 89. So if I go ahead and put this white one on here, you can see now I've got two moving averages, and I could use this as a crossover. And that's what many people do when it comes to moving averages. So here, if we take a look at the crossover, what we're doing is we're looking to see when this crosses over. Now I've set up a little bit of a different example for you. You can also color code some of these lines where basically if it's crossing a moving average here, and what you see here is I've got a 34 day and a 10 day where we're crossing the line, it'll color code things white. So anytime we get a crossover, we will go ahead and white code those. And anytime we're getting under the blue line, we'll color code those yellow. So what it allows you to do is step into trends and say, hey, we're crossing over right here, because the yellow line or the yellow moving average was lower. We're changing those to white. And then the minute we get under the blue line, we'll color code it yellow. So this would be your entry point. That would be your exit point. So you're getting a trend. If you're looking at kind of the trend, you're getting kind of this trend or that movement from here to there. So it's a good way to kind of spot some trends. And they're not always going to be perfect. But what you'll see is if you back some of these things up, and we'll go ahead and let's take a look at Apple as an example. Okay, so you can look at crossing over, okay, where the moving average crosses over right here. You're in the white candle, crossed over there, okay, and you stay in the trend until we get under the blue line. Okay, so something as simple as that allows you to spot the trend. Are we going up? Now I've got kind of white candles. Are we kind of getting some noise? We're starting to see some yellow candles, so we're going down. And you don't need a lot of colors for the candles. Now I've just simplified it with a 2-color tone, because otherwise throughout the day you might see something like, you know, red, green, red, green, red, green all the time. But here what we're looking is we're looking at trend. Are we going to the upside? I've got kind of white candles. Are we going kind of to the downside or showing some weakness? I've got yellow and something in between. Choppiness is probably green. We're unsure of where we're at there. So that's another way to kind of look at it, is using these moving averages to kind of help see the direction, the trend, which way it's going. Heikin-Ashi candles do this as well. If you go in and you change your candlesticks to Heikin-Ashi, you can also do this. I'm going to go ahead and show you this on this chart example, because then they'll see them a little bit more green or red. And you can see they go ahead and take the lows and the highs, and that kind of sticks a little bit more to the trend, but unfortunately they're still a little bit more noisy and stuff. So I like to see the regular candles for me. rather than the Heikin-Ashi, and then I'd rather just color code them instead. So for me, looking at candlesticks, you get the actual true price here of candles, but they're just color coded differently. So I've got white and I've got yellow kind of for the downside. And I've got where it's white, it's above a certain moving averages, and then yellow on the downside. So again, I'm just looking at the crossovers there. So that's kind of another way to do it, to looking at direction. Hey, upwards, white, downwards, yellow, choppiness, kind of mixed color, green and red that we normally have. All right, so I'm going to show you the third method to kind of spotting a direction. And the third method is actually probably the easiest to give you an idea and perspective of how to really do this. We've already talked about kind of the time frames, but it's as simple as taking the end point of your chart way over here at the end, taking that point and drawing an extension to the current price. So if I was looking at this example, I'll just take the point right here. I'm just going to draw it nice and thick. So we'll go ahead and take a point from the first price. We'll look at the next price, and there's my line. And it's as simple as that, going from the first initial price point to the current price point, and I've got myself a trend, and that's your trend line. It just cuts the chop all around, and what it's doing is really creating a moving average from the start to the end, because what price typically tries to do is it tries to find an actual price. It's always trying to go towards the average. So we either overshoot to the downside or overshoot to the upside, and that's why price is constantly wiggling. So we're always trying to come back to the mean or the average price. So it doesn't matter which stock you choose. So let's say we take Twitter. All I have to do is take the current end price to the current price right now, and I get kind of where it's at. And there's my trend. It's really nothing. It's going sideways. It went too high, came back, went too low, and that's kind of where we're at. The trend is kind of really sideways. Now, if you're looking to trade a shorter duration, obviously, you're looking at, hey, I want to look at the long term. Like this may not apply as much because, you're trying to buy at kind of at these lower ends for the snap up back to the average. But if you're looking at the average, we're already at the average. So now the question is will that stock break up or down? And that's where something like this, or looking at, hey, relative to where we started at, where are we? Are we way above or are we way below? And that gives you kind of, hey, buying on value down here at the lower ends could be a good thing. And that's where this was really good. But now you're kind of back in the middle. And it's like, oh, it's indecision. And you don't know if it's really a good value. Here's PayPal. So again, we'll just take over here, this point. We'll go current point. It's been selling off. So now the question is are we going to start turning around? Well, we don't know. Here's kind of the highs, the lows. There's the trend. There's the direction. The direction's been going down. Now, if I zoom back out and look at a much longer time frame from 2018, now I got a more upward length or an upward trend. But now that means you're looking to be in the stock, 1, 2, 3, 4, 5, 6 years, maybe. From a 6-year perspective, it looks okay. But if you're trying to trade a shorter duration, which most people are, you start looking at it, we're actually trending down. Now, recently, okay, as we start looking at recently, you could say, hey, I'm trading a really short duration. Well, what I can do is take kind of this last endpoint, look here, and even then, we're still kind of going downward. So there are points where, let's say you're looking at a 30-minute where you might say, hey, we are actually kind of heading a little bit higher, but this recent trend is down. So you could find spots where it'll confirm your bias of the trend, but be a little bit more careful because the longer duration will usually dominate the trend. So take any stock, just look at, towards the end versus where you're at, and that gives you a rough idea of kind of the trend. We had a lot of sideways action, good up move, sideways, and now we're kind of back to more of this angle and this trend, and this is kind of the speed that the stock is moving at. So it's another way to kind of look at these technicals and these stocks, looking at the trend, which way they're going. And if the angle is kind of upward, then you're looking at bullish. If you got a downward angle, then obviously it's bearish or there's a lot more selling pressure. So anyways, I hope that helps and gives you kind of 3 different ways to really just spot these trends. I try to keep it simple for you and just to give you kind of a dummy proof way of looking at it. Yes, there's more complicated ways, and those are the things that we cover in classes and live sessions that I deal with, and also the one-on-one sessions. But this is kind of a starting point for those of you that are new to technicals and gives you a simple way to look at things. You don't have to make it complicated, because the more indicators you have, it just makes it more confusing, figuring out which one do you use, what do you pick, what makes sense, and what has more value in an indicator. But if you keep it simple, it should allow you to just kind of make a decision without stressing yourself out. So anyways, I want to thank you so much for joining me. Thanks again. Enjoy the rest of the week ahead, and I will see you next time.